All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. A little bit different market open here this morning. I don't mean because it's flat. Flat has been pretty normal for the markets, but it's flat to slightly down. S&P set to open up about 5 points lower here this morning. But what's really unusual is that we have seen S&P futures fading here throughout the European session. They got an initial bump, but have been pretty much fading ever since. We saw a little bit of sell as Japan opened up, but it rallied back as China opened up. You can see the market selling off into the close yesterday. A little snapback rally into the close. This is definitely not bull market action. When you look at bear markets, this is how bear market type days close. So definitely not bull market type action, but one day doesn't make a market. And then you can kind of see where the market's set to open. It's set to open within that range here from yesterday's close. So, from just a market level standpoint, not a huge deal. We will see the FXI open lower, the EEM open lower as they held up yesterday, but they will be opening lower here this morning. We're going to see tech get riddled in a few areas, some news there with Google. That'll put a little bit of pressure, but not a ton. We see oil down just slightly, gold up just slightly, the VIX marginally higher. So it's not a morning where you look and you go, wow, this is a big game-changing type of morning. We do have the Fed on tap here today, and they will be releasing their statement here at noon Mountain Time, 2 o'clock Eastern. So that'll be, that'll be a typical Fed reaction type of thing where we'll get a bounce up, we'll get a pop up, we'll get a drop down. Eventually the market will be right where it was before the Fed, and then it'll kind of, make some deciding action afterwards and into tomorrow morning. That's just been the typical Fed here of late. I wouldn't expect anything too different from that. But if there is something different from that, it'll be important to kind of gauge what's going on here with that. All eyes are on Micron earnings after the bell here today, and what that means for the markets. But I would argue with you that there are a few stories out there that are worth really paying attention to here this morning. And, we've spent time, like with Anglo American, on the breakout here and talking about the bullish story and why it's bullish and, what's going on and some of those real positives. But one of the things that I expect to happen here in 2019 is for fewer of these stories like Anglo American to emerge and a lot more bearish type stories to emerge, where you're looking and you're going, wow, things are, they're not looking all that great. There's some trouble in paradise here. And, there are three that I think are just absolutely must kind of keep an eye on here this morning. Now, you could argue none of these are, Caterpillar or Bank of America or Apple, but these are three stories seeing some significant erosion in the story. And if you think about, what the bear's argument is in the market, the bear's argument is that things are going to get worse from an earnings and economic standpoint. And we have seen from an economic standpoint that happening. But from an earnings standpoint, last quarter was pretty good. We broke it all down. It wasn't bad. It was a lot better than what had been feared, and in some cases, pretty darn bullish. Things like Chipotle Mexican Grill, Bank of America. There were some really good earnings reports, in the midst of some of these companies and some of these stocks. So, we have this kind of element where we're starting to get into the new earnings season right here. Just some of the early earners coming out. But this morning there are three earnings stories that I think absolutely have to be paid attention to. And I apologize, my screen is, there we go. But one is UBS. UBS is a European bank. right? Okay, European banks, they always have trouble. Things aren't going well for them. Things never really go well for them. Things haven't gone well for them since the financial crisis. So, what's the big deal? It's a European bank, and you're right. Things haven't gone well for them, for quite some time. But UBS here, they essentially lowered their guidance going forward. Talked about some of the struggles that the bank is realizing right now because of the economy. And they use this term worst first quarter in history. Worst first quarter in history for, a bank that's on the global economic stage. If we come into UBS and we just come put on a monthly chart here, here we are. They had some changes back here in 2014, but you can see what this bank is. It's near its lows, and it is set to open up strongly lower here this morning. After this outlook going forward, they talked about different cutting that they are going to have to do, that they're going to have to deepen their cost cuts. And it's one of those stories where you go, okay, this is the largest bank in Switzerland, right? And basically saying, look, things haven't improved here overall. And so this is something worth watching. We saw, I believe it was last week, J.P. Morgan came out and warned of lighter trading revenues for the banks. Now this from UBS, okay, a little foreshadowing. I think it's a little too early to say definitively, but this is something that where it just simply sets the stage going into the earnings season, that if the bank, if they don't have some really solid numbers, the market's going to get skittish very, very quickly. Another one is kind of a smaller story, limited brands. Now, limited brands, this is, Victoria's Secret and, that kind of a little more niche retail, right? This is a story where, there has been some market erosion, or market, not market erosion, what's the right term here? Jeez. My apologies. Oh my goodness. Market share erosion. My apologies there. But we've seen some market share erosion with limited brands here. The Jefferies analyst came out, basically used this theory that heavy ads or heavy elevated promotions right now are just showing that the market share on limited brands is falling, continuing to fall. Some of the pricing on some of their products is at the lowest that it's been in all time. So, basically using that argument to say, hey, things are not, are not that great. Use the term rolling over when it comes to talking about Bath and Body Works, which L Brands owns. So it's a very bearish type story, and very bearish downgrade. Down to $16 a share here. You don't oftentimes hear analysts use the term aggressively when it comes to the sell term in the market, but they said sell aggressively. And, you can argue, hey, this is kind of a niche story. All right, yeah, you're right. It's a little more of a niche story, and one that, is, can you say, hey, the trouble in L Brands is kind of, bleeding over to other retailers? Probably not, right? Probably not. But the one that you can say is something that is, ouch, from a global economic standpoint, is FedEx. And there are analysts out left and right this morning defending FedEx. There are some that are cutting targets on FedEx. You can see FedEx is down here to about 170, down about $12 here on these earnings. But Morgan Stanley lowered their price target. Credit Suisse raised their price target. Oppenheimer lowered their price target. JP Morgan downgraded them. It's a mixed bag from analysts here when it comes to, FedEx and FedEx earnings. And it's just one of those where Citi is, positive on them, but Barclays is not. It is very, very mixed, and you don't oftentimes see that. But FedEx CEO basically said, hey, the U.S. business is pretty good. The international business is struggling a little bit more. Basically said they're having to review their cost, right? Because higher operating costs are impacting their results. So on a cost side, things are a little more negative. But here's the big thing when it comes to FedEx. They cut their full year 2019 earnings per share view, right? And they cut it. Why? Well, they didn't just cut it because of, cost, but because of revenues. And if we just come in and take a picture of what this looks like, and I love this site, Estimize, for that, to kind of give these pictures here. You can kind of see what this looks like. The earnings per share missed, right? They missed, and all right, slightly lower than expected, but not a huge, monster type miss, right? But here's the revenue. I mean, this is the revenue. When has FedEx had this big of a revenue miss here of late? This is a big revenue miss. I mean, this is a big revenue miss when it comes to FedEx. And so, okay, challenging quarter. They're integrating, TNT. They're doing this, they're doing that. But, you have a company now with higher costs, with revenues where, they're still up year over year, right? Last quarter, they were here about 16. 16 here. They're up about 17 right now. So they still had quarter over quarter revenue growth, but that's not much revenue growth overall. And a company that's now had to slash their estimates going forward, that is a mix of a company that, that has some significant headwinds still to deal with. And I do expect that, FedEx we will see struggle over the course of this quarter. We saw the first signs of FedEx really having some issues last quarter. That was the first sign that we have seen of, wow, okay, you know what? FedEx is showing some, material weakness in terms of the earnings. We even talked about it on the earnings day. Said, normal is for the market to give them a break, and they'll at least rally back to where they were before earnings. A lot of times then they'll sell off and revisit the lows. I tried to play FedEx right in here, wasn't able to, catch that downdrift here. But, now the earnings gapping on down to 170. I'd be very surprised if the December lows are not revisited and if they're not broken. Obviously you need the market to sell off a little bit for those lows to be broken. But I do think that is a significant risk out there, here for FedEx. You have a lot of the analysts that have price targets up over 200 that are slashing their targets, right? But one who's been pretty right when it comes to the pricing on FedEx and the downside move on FedEx has been Morgan Stanley. And they came out and they said, the miss and guidance cut were much bigger than expected and believes uncertainty about the stock will continue after this report. Basically says Q4 headwinds applied in the full year guidance, were isolated this quarter and didn't continue into the full year, 2020. But thinks there's significant downside to the current consensus. And he cut their shares, cut the price target from 156 to 148. And this is one of the few companies that's been right on FedEx here of late. And, some of the ones that have been dead wrong are out defending it. But, overall, this is an ugly quarter for FedEx. Some will argue that it doesn't mean anything for the broader markets going forward. and they'll use the argument that the U.S. market's kind of growing here. All right, when the trade war is solved, all right, we'll see a pickup. But this is an example of an earnings report that if we start to see a few more of these stack onto each other, and I'm not talking about Micron. Micron, who cares? Micron's not going to have anything to do with the global economy. It is such a up and down type of a thing. But when we start to hear from Nike, when we start to hear from some of the early banks, if they start to echo some of these tones from UBS and from FedEx, that could offer significant trouble. But there's still more that would have to come. But this is one of those stories in terms of FedEx where the story has changed. The story has been bullish for a long time when it comes to FedEx. It has been one of the best bull stories out there, but the story has changed. And to see this stock ultimately trade back below 100 in the 18 to 24 months to come would not be a huge surprise. About 10 minutes until the market opens. I'm going into this open with some Home Depot and Home Depot puts and some and cash. I mentioned yesterday I'll be looking for a Halliburton entry here on the open, and if you look at Halliburton here, rallied kind of similar rally to what we've seen with Home Depot, but. I'm looking to be a seller of this rally. We saw it break down below the 7-hour moving average yesterday. I didn't want to buy it in the close. A little snapback. Option prices elevated. Didn't break through this gap here. But I'll have my eye on that for an entry here this morning. As well as Caterpillar. And, if you look at Caterpillar, it broke down through the 7-hour moving average yesterday as well after the gap up. We'll be looking at that for an entry here as well this morning. You can see that it's still above the 7-day moving average, so I would like to see it kind of break that here as well. And if we get that action, I'll look to take advantage of that and go forward. My thoughts on Home Depot haven't changed from yesterday. I know, Home Depot reversed off of its highs. It was up, $2.50 or something at one point, ended up 70 cents and, everything else. I don't think yesterday's action meant a whole lot, for things. I don't think you can look at it and go, wow, this was, this action meant X, Y, or Z. I do think, though, if there's a gap down this morning and a break of the 7-day moving average, we're simply talking about a spinning doji and a bearish pivot, type of action there. Ultimately, this is something that I think, is has that potential for the 168, 170 area, and so I'll keep my exposure there. My delta is going to be very small, meaning if Home Depot falls $2 today, the option value may not move all that much, right? It's going to need a secondary move, for that to happen, and I do expect that we'll get it, but when will that happen? Will it be today? Will it be next week? I think that's a little bit up in the air, and as far as my next trade, I have about $1,500 in cash, looking to put that in play, but I want a high probability, setup with strong reward potential, and just really haven't seen it so far, in the last couple days, here in the market. Hopefully we'll see some of it, come in today. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.